Hi everybody, this is Osprey from MyChartCoach.com, and we're going to take a look at some of the stocks that finished Friday in play. So these are penny stocks and small caps. And so first up, we're going to look at RKDA, closed up 65%. So that was a really nice move last week. Really strong all the way into the close of the week. Closed up at 82 on RSI, Fasto's at 83. So it is frothy. You can see it had the multi-day run. It took the little pause here on Wednesday, but other than that, we're looking at a super huge run here. Now it did break above the 200-day simple moving average, and it hit the 300-day simple moving average. It has to bust above 1067 to head higher. If it fails to get above that 1067 resistance level, the candles could work back into the bands. If they pull back, you want to see that 200-day simple moving average at 752 hold. This does look like a potential climax spike here. So if it fails to get above that 300-day simple moving average, that'll be a signal that it is cooling down. If you look on the RKDA weekly chart, you can see here that this last week's candle did close above that 50-week moving average at 882. On a pullback, you want to see that 50-week moving average hold. If it drops below that level, that would be a red flag, and then you could see a drop down to EMA 4. That was a really bullish close this week above the 50-week moving average. If it holds, then that would be a signal that this new uptrend is intact and that it wants to push higher. So keep an eye on that level. Okay, let's look at RXII. Very nice move as well last week. As you can see, it was on a 4-day run. It did close Friday above that 50-day simple moving average at 389. It hit the 100-day simple moving average at 499.91 and pulled back. You can see the upper wick. There was some profit taking. If it fails to break that 100-day simple moving average, this 50-day simple moving average will be tested. Now, if it drops below that 50-day simple moving average, that's going to signal consolidation. You want to see EMA 4 at 357 hold. Now that it's above the 50-day simple moving average, it needs to stay above that level for the chart to be super strong. If it can break above that 100-day simple moving average, the 200-day simple moving average at 532 will be the next level to break. Okay, once again, the big volume spike after a multi-day run and then the pullback from high of day, that does look like a climax spike. A climax spike is where people are taking profits and that it signals possible consolidation or at least a pause in the uptrend is coming. Okay, let's look at ENRJ. Okay, closed up 18%. Notice RSI is at 59, so there's still room to run until that 70 overbought level. Fasto is now at 93, so that is signaling that it's temporarily overbought. So that's the thing with ENRJ here. It's hitting that 50-day simple moving average at 18.8. You can see the last time it hit it back here in January, it failed to break and it pulled back, and so it's right back at that level for the first time since this move in January. So going forward, if it can get above that 19 resistance level, above 19 tomorrow, that's going to signal that it wants to head higher. If it struggles to break 19, then you could see it pull back to test this middle Bollinger Band. It did close above the middle Bollinger Band at 16.1, basically 16 on Friday. If 16 holds, a new uptrend should begin, but it has to be above 19 to signal that it wants to break out higher. And then if it does, then we'll be looking for a run up to the 100-day simple moving average at 23. Okay, look at REXX. This is another energy small cap stock. It's in the energy sector, and so as you can see, RSI is below 48, and so above 50 would signal the chart is really heating up. Fasto's at 68, so it's not at overbought levels. You have a bullish crossover here on ADX with the green line crossing the black and the red line to the upside, so it's a signal the bulls are really heating up. Notice how the dots were above the candles until Friday. They flip below. That's parabolic SAR. SAR stands for stop and reverse, so this is a signal that this downtrend could be stopping and reversing. Now you have to be careful with the stock like REX. You can see here where it got above the middle Bollinger Band and it still pulled back. This was a one-day move here, and then you had a big pullback. It fails to hold on to the gains, and so going forward next week, it's all about holding the middle Bollinger Band at $1. Above $1, if it stays above $1, that signals REXX is in play. Okay, and then we'll be looking for a possible run up to the 50-day simple moving average at 132. That is the target if it can get through the upper Bollinger Band at 116. It might hit that upper Bollinger Band and find some resistance there. If it can bust through, similar to this candle over here in January, then we'll be looking for that 50-day simple moving average to be tested. If it drops below the middle Bollinger Band and the dollar level, it will no longer be in play. Okay, let's look at PES. This is another energy sector stock. Notice how RSI closed just above 50 on Friday. Fasto's back above 80, and then you have the green line. Check out plus DI's breaking away from the red and the black line. So these are all signals the chart is heating up. For this stock, I think that all you really need to concentrate is on these two lines right here. This is the 50 and 300-day simple moving averages. Basically, above 321 is going to signal that it wants to head higher. If it can close above 321, then we'll be looking for a run back up into the fours. Okay, you can see this 4 level was the recent top, and so that's what we'll be looking for a retrace to. If it fails to get above this 320 level, then it's not ready to go. It's that simple. I think it's better to wait for the break above resistance. If you're on the sidelines looking to load, you see it bust through that resistance and it closes above. You need to watch out though loading intraday, or if it, or if you do load on the break above and then you see the red candle the next day dropping below, that's going to signal to get out. The only way that it's a good play is if it stays above both levels. Okay, let's look at NIHD. Okay, yeah, this had a really nice move on Friday. As you can see, it broke out what we call high close horizontal resistance, and so that's always a big move. As you can see here, it had a sideways channel going, and then the break above the top of the channel, the close above the top of the channel on Friday was a signal that it wants to head higher. This candle on the 5th was the top closing price, recent closing price, and so the close above on Friday, that is signaling that it wants to head higher. Now the upper wick did pull back from high of day, and that does show that it was hitting another key level. I'll show you on the next chart, and so if it fails to break that 190 resistance level, it could signal a temporary top. I think the main level to watch this week is EMA4 at 152. Notice how ever since it got above that level on this candle, the candles have been above that level every single day. So a close below EMA4 will be a bearish change in trend. It's been holding for multiple weeks, and so that's what you're looking for. As long as EMA4 supports holding, the signal is to keep riding. Now, if you look at the weekly chart, you can see the level that it's hitting. Okay, so it's right at the 100-week moving average. That's at 174. This is a big resistance level. It's on a 4-week run right now. If it fails to close above that level for the week, that's going to signal a temporary top, and then you could see EMA4 at 126 tested. That as long as EMA4 is holding, this is a really strong chart. Now, as you can see over here, the 200 and 300 week moving averages are undefined. This is the top moving average on the weekly chart. Once it busts above the 100-week moving average and it turns into support, it's going to be, it's only going to have high close horizontal resistance. It's going to be trading above all the moving averages. This is already a really strong bullish weekly chart. This is a nice, longer term swing trade play since the close above the middle Bollinger Band back here in January. Notice the big volume. And so as long as it can get above that 100-week moving average, it's still in play. If it fails to break that level, that's going to signal a temporary top. Now let's look at a couple of marine transportation stocks. I probably shouldn't even be posting, a video about tops and DRYS, but I'm going to do it anyways. Here you go. Tops is at up 19%. Keep an eye on it for getting above 50. It did on our side. It did close above 50 on Fasto for the first time in quite some time. It had a bullish crossover on ADX. Notice how the green line crossed the red line to the upside. So it heated up on Friday. It closed above the middle Bollinger Band, which is the dotted purple line at 18. And so going forward, if it can stay above 18, okay, it's in play. Now, if it drops below 18, it'll be a risk to hold. Look what it did here. It closed above the middle Bollinger Band, and then it closed below, and the big downtrend followed. That's the risk. That could happen. I mean, the time before that, it closed above the middle Bollinger Band on the 5th, and then the next day it was red candle. So each time it closes above the middle Bollinger Band, a red candle forms. And so tomorrow, if you see a white candle and another close above the middle Bollinger Band, that will be a bullish change in trend. The odds are that history repeats and a red candle forms tomorrow and it drops below the middle Bollinger Band. That would be the pattern. That's the pattern right now for tops. Now, if there's a close above and a white candle, that's going to be a bullish change in trend, and that's what everyone's looking for that's trying to trade this long. And then the big level to break is the 50-day simple moving average at 21. Notice how it was tested here. It was tested here. A close above that would be very bullish. If it can get above 21 intraday tomorrow, then it has to stay above that level. If it gets above and it's trading above, that's your signal to keep riding. And then you want to use that as your stop loss level. If it drops below, you don't want to be holding. Now look at the tops 15-minute chart. You can see they used that pop in the morning and they faded the rally. And so yeah, they basically just dump shares into it. That's what DRYS does. Or Tops does and DRYS does. That's what they do is they dilute loot, and you know, they're really good at selling shares. And so as you can see, it has a downtrending channel. It has to break the top of this channel to change this trend. And so basically, once again, it's this 1844 level. You know, if you see it trading up here, you know, above 18.5, then that'll signal that it's ready to head higher. If it fails to break that 18.5 resistance level, that's going to be a red flag. It's going to be a really big red flag if it drops below 17. That's the 50 simple moving average on the 15-minute chart. Okay, let's look at DRYS. Okay, this is heating up as well. And so this is a chart. This is the last chart that I posted. And so it was showing how this was a key resistance level here in February. And then notice how it hit that level multiple times. Okay, hit that level, pulled back. And then this candle closed above. The close above high close horizontal resistance signaled it wanted to head higher. And it pulled back. And then notice how it did break out higher. So this was your clue that it was signaling, okay, yeah, this is a change in trend because it closed above resistance. And then it did follow through and broke out higher. Now the next big level to break is $4. Basically, I think with DRYS, if it can bust above that $4 level, it could get moving. This is a big resistance level. It hasn't traded above $4 since you know, ever in 2018. You know, it's hit that level. Maybe it traded slightly above here at the beginning of January, but it hasn't formed a candle, a close above since back here in December 11th. So a close above 4 is going to be your bullish signal. And so basically, DRYS, if you're looking to trade it tomorrow, above $4 signals it in play. If it drops below $4, you don't want to, you know, you don't really want to be holding. And you know, it basically, I would watch this 100-day simple moving average at 375 as your stop loss. If it drops below 375, that's going to signal consolidation. It's not ready to go. It's interesting. It's breaking out and it's heating up. And we know how DRYS gets. You know, who knows? It could have this kind of run. You know, what you're looking for is volume. If you see the big volume come in, that might be the signal that it's, you know, big volume and a push through 4 could be the signal that it's in play. Okay, let's look at GLBS. This is one to keep an eye on, and this is an example of how these, this is another marine transportation stock. This can show you how they can head fake you, and that's why we always say to be very careful with these. They're best for day trading. You know, they're very risky to swing trade. And as you can see here, it closed above the 50-day simple moving average, the green line, on Friday. Also closed above the 100 and 200-day simple moving average on Thursday, and then it pulled back below on Friday. So it head faked everybody. It failed to stay above, similar to this candle right here. And so going forward, if you see GLBS, you know, if the other ones start to run, the entire sector could heat up. And so what you're looking for is above 113. GLBS trading above the 50-day simple moving average of 113 signals it's in play, and then it has to stay above that level. That's the top moving average on this chart. If it closes above the 50-day simple moving average and turns into support, this chart could turn really hot really quickly. Right now, it needs to stay above the middle Bollinger Band at 103. If it drops below 103, it's no longer in play. It has all these moving averages lined up here. You know, what it could do possibly, I guess I'm wrong here about the top moving average. The 300-day simple moving average is at 237, so it's off this chart. But you have you basically have the 50, 100, and 200-day simple moving averages right here. And if it gets above 113, then you'd be looking at the 300-day simple moving average way out at 237 as the next simple moving average resistance level. Okay, a couple stocks just to keep an eye on this week. Okay, these are ones that could possibly heat up. Look at IDXG. Okay, so it's right here at the 100-day simple moving average. Check out this gold line. If you see it trading above 110, basically, then that's going to be a signal that it wants to head higher. If it can close above this gold line, it could get moving, and then we'd be looking for a run up to the 200-day simple moving average. If it gets above the 200-day simple moving average, it could really go. If it could turn it into support. Right now, if it can break that 110, that could signal a nice move up to the 200-day simple moving average, so keep an eye on it. And then another one to watch is CYCC. You know, this is trying to heat up. Okay, so it hasn't broken out yet, but what's interesting to me on this chart are these closes. Notice how even Friday's close. So you have, last week, you have the close on the 5th above the middle Bollinger Band for the first time since back here on the 29th of January. Okay, so there was a close below the middle Bollinger Band, the dotted purple line, on the 30th, and all of these candles are below the middle Bollinger Band until you get to this candle right here. And so that was a signal the chart's heating up. It pulled back for a couple days, and then it closed back above on Thursday, and then it closed back above on Friday. Notice how Friday's candle, the close is at 157, and the middle Bollinger Band is at 157. So it's turning that level into support. So going forward for CYCC, if it can hold 157, that will signal that possibly a new upturn is going. And what we're looking for is a break above this 50-day simple moving average at 165 for a run up to the 100-day simple moving average at 172, similar to what happened back here. You know, that's the type of move that could possibly happen this week if it can hold support and break resistance. Okay, thank you very much for viewing this video. Come check out our chat. I'll post the link below the video. Thank you.